If you're worried about what your favorite tech stocks are going to do over the next couple of days or weeks, then stay tuned. We're going to run through Tesla, Palantir, SoFi, AMD, and of course Nvidia. Last week, the stock markets were pretty volatile. We had some really positive earnings readouts from some of the largest tech companies, but we also saw the stock markets react and have a bit of a pullback following the end of the tariff pause. So in this video, we're going to look at whether it's a good time to buy or sell if you already hold these stocks. So let's dive straight into the video and start with stock number one, which is Tesla. Tesla reported last week on its Q2 earnings and the results weren't great. They reported that their revenue and earnings were down 30% and 23% respectively. As a result, we can see some downward pressure on the stock price at the moment, but I think there are still some bullish long-term factors, such as they had strong vehicle production deliveries and there's lots of optimism around Tesla's high-margin robo-taxi business. If you look at what the investment analysts are saying about Tesla, they definitely remain divided on this stock at the moment. And if you look at the actual stock reaction, the Tesla stock price fell around 8% after the earnings report came out. But if you listen to what Tesla are saying, they're basically saying that their robo-taxi business isn't going to get into mass production until 2026. So if you're looking at this stock in the short term, there's going to be quite a bit of volatility. And in my view, there are probably better stock opportunities to make money in the meantime. But as a long-term hold, Tesla's fundamentals still remain strong for long-term investment growth. So the next stock we're looking at is Palantir. This stock has seen enormous growth, going up by over 500% over the last 12 months, and it reached an all-time high stock price just over a week ago. Now the valuations on this stock are very high. The price to earnings ratio, which measures the company's stock price in relation to its earnings, is over 600 times, while its forward PE ratio, which measures the stock price in relation to its expected future earnings, is over 200 times. And anything over 50 or 60 would normally make an investor think twice before buying it at such a premium. Now you might already hold this stock and be wondering when you should take profits, or you might be watching it and wondering, can I still buy in or have I missed the boat with this one? Well, if you hold Palantir stock and you're sitting on large gains, then it may be prudent to take some off the top, realize some of your investment returns, while also holding some for future long-term growth. Palantir releases its Q2 earnings on Monday the 4th of August, so we could see some stock price movement depending if they beat or come in under the earnings estimates that are forecasted for the company. I think if you spot any pullbacks or dips in the stock price, then it could be a great opportunity to buy in, whether that be because earnings aren't as good as forecasted or because of a broader stock market dip due to tariffs or worsening economic data. In my view, Palantir's long-term growth potential is also backed up by the financial health of the company, as they've achieved over 30% revenue growth and they hold over $5 billion in cash and only have around $200 million in debt, which is a great platform to help fuel their future growth and expansion. I think Palantir still has room to grow, particularly if they can expand their government and commercial customer base outside the US. The third stock to cover is Nvidia. They recently reached a huge market cap of over $4 trillion and their share price has hit new all-time highs. However, Nvidia's Q1 financial results for this year were actually a bit of a mixed bag. They posted $18.8 billion in net income for the quarter, which was up 26% from the prior year, but it was also down 15% from the previous quarter. The decline was primarily due to a $4.5 billion inventory charge related to US export restrictions on its H20 chips, as the US government has now imposed new rules requiring Nvidia to obtain a license to sell their chips to China. All of this happened at the start of the year. The good news is that Nvidia have come out recently to say that they'll resume sales of their H20 chips to the Chinese market. In Q1, Nvidia also reported over $53 billion in cash, which is absolutely huge. It's a 71% increase from the year prior, so they're in a really healthy financial position. We just had a key week for readouts on earnings in the tech sector. Q2 earnings were released by Microsoft, Meta and Apple, and overall there was lots of positive news, so there may be some short-term price movement in the Nvidia stock as a knock-on from how investors feel on the sentiment for the overall tech industry. And Nvidia's Q2 earnings readout is set for towards the end of August, where we could see a more significant move in the stock price, depending on whether they're able to beat their earnings estimates. Nvidia's stock is no longer the bargain it once was, with a valuation of 40 times forward earnings. And the reality is that Nvidia is now a company valued at $4 trillion. So it's going to be difficult to get 100% growth like we've seen in the past in a short space of time. But valuation alone doesn't tell the whole story. Nvidia is the undisputed leader in AI computing, a position that's becoming more entrenched with each product cycle. This still remains a great company to invest in for long-term growth, and some investors might look for the next stock price pullback before entering, or for long-term investors sticking to a dollar cost average investment approach may offer a prudent strategy for gaining exposure to one of the most influential companies right now that's driving the future of technology. So we're just over the halfway point in the video, and I've still got two more stocks to cover, which are AMD and SoFi. If you're finding this video helpful, please subscribe to my channel as I'm just starting out on YouTube, and any support you can give really helps the channel to grow. Alright, with that said, let's get going with the rest of my video. Next up is AMD, who have been a big beneficiary of the AI boom, with their stock price up by over 120% in the past 5 years. On the 5th of August this week, AMD is set to report its Q2 earnings, which many anticipate being pretty good. If revenue comes in around $7.4 billion like the company estimates, it would have grown the business by 35% year over year. Now AMD is definitely no stranger to beating its forecasts. In its past 10 quarters, it has met or beaten its earnings per share estimates, yet there's been no consistency in how its stock price performs immediately after. This shows that investors are considering more than just earnings when deciding how to value the stock. Anticipating how a stock price will move based on earnings can often be counterproductive because the stock market doesn't behave rationally. A much better approach, if you believe in the company long term, would be dollar cost averaging to help offset some of the inevitable volatility. If you're thinking of buying AMD shares now, then you should be prepared to pay a premium for the company. It's trading at over 43 times its forward earnings, which is higher than Nvidia, who are the leader in the space. I'm currently more bullish on the Nvidia stock buy, but AMD does offer a long-term way to have exposure to AI growth over the coming months and years. So the final stock I'm going to cover in this video is SoFi. They have been soaring lately, with shares of the online consumer bank more than doubling from a low point back in April of this year. And I know plenty of investors want to know if this stock has more room to run. SoFi announced their second quarter results last week, and profits grew faster than Wall Street expected them to. SoFi's management team expects to add at least 3 million new members this year. This is an amazing accomplishment for a company that signed up its 1 millionth member just 5 years ago. But despite all of this, the share price actually fell after the company also announced a public offering of $1.5 billion of its common stock. Hopefully SoFi used that money wisely to fuel their continued growth, but regardless, there is still a lot of investor caution as they have an extremely rich valuation. High earnings multiples aren't unusual for SoFi, but that's because it's been growing so rapidly. If its pace of growth slows or investors begin anticipating a slowdown, the stock price could fall quite hard. Personally, I'm not about to let go of my SoFi shares despite the big run up, but I'm also not in a hurry to buy more right now either. So I think I'm going to watch and wait for the next pullback to buy some more of this stock. So that wraps up my take on these tech stocks right now. If you found this video helpful and you'd like more content like this, then check out my next video on the top AI stocks that I'm buying at the moment. It goes without saying, make sure you research your investments so you understand what you're buying. This video is not investment advice, it's for educational purposes to help you on your investment journey. So that's it from me. Please subscribe to my channel, give the video a like, and I'll see you on the next video.